If you've been keeping an eye on the stock market lately, you've probably noticed it's been on a bit of a roller coaster, soaring to record highs and making some investors bite their nails, wondering, are we in a bubble? Welcome back to Stock Whispers, your gateway to investment brilliance. Are you ready for a roller coaster ride through the world of finance, where fortunes can soar as high as a Bitcoin rocket or take a dive like a rock star after a wild night? Today, we're diving deep into the journey that might just make you see the stock market in a whole new light. It's like being a detective, but for stocks. And by the end, you'll be smarter about where the market might be heading. So sit tight, because we're about to lift the curtain on the financial world's current spectacle. First things first, let's talk about why some folks are whispering the B word, bubble. It's not just because they love bubbles, though who doesn't love bubbles? The stock market has been hitting record highs, and there's so much hype around artificial intelligence that some investors are getting jittery. Valuations are stretching like a rubber band, crypto is on a tear, and the S&P 500 has leaped over 25% since late October. That's like your cat suddenly deciding to be friendly with the mailman. Unexpected and a tad alarming. It seems like every day there's a new headline about the market hitting another peak, and it's got people on edge. It's easy to point fingers at AI and say, you're the reason we can't have nice things. But hold your horses. It's not just the tech wizards and their AI creations that are seeing their stock prices soar into the stratosphere. From your favorite chicken wing joint to cutting-edge biotech firms, a variety of companies are sitting pretty with valuations that make you wonder if they've discovered a secret treasure chest. Yep, even companies that have nothing to do with robots or fancy algorithms are joining the high-valuation club. It's as if the entire market caught a fever, and the only prescription is more valuation. Now let's cut to the chase and talk about the 10 most richly valued stocks that have everyone from Wall Street to Main Street talking. These companies have market valuations of at least $10 billion, and their price-to-sales ratios are through the roof. Hold onto your hats, it's a diverse list. It's 10, Trade Desk or TTD, with a price-to-sales ratio of 22.0x and a market value of $42.7 billion. This digital advertising platform is turning heads and taking names. It's like the cool kid in school that suddenly got cooler. They've become the go-to for companies wanting to make a splash online. Their success story is a sign of our digital times, where ads are smart and everywhere, and investors, they're paying top dollar to get a piece of that action. It's a digital gold rush, and Trade Desk is sitting on the motherlode. But as their valuation soars, it begs the question, how high is too high? This kind of growth is eye-catching, but also eyebrow-raising. It's a tightrope walk between groundbreaking success and bubble territory. Everyone's watching, waiting to see if they'll continue to soar or if gravity will eventually take hold. 9. Palantir or PLTR. The data analytics giant isn't far behind, boasting a 22.9x ratio and a hefty $50.9 billion market cap. They're crunching numbers, and their valuation is off the charts. Palantir has become synonymous with big data, helping everyone from governments to corporations make sense of vast information landscapes. Their tools are powerful, and their potential seems limitless. But with great power comes great valuation, and Palantir is riding that wave. They're at the forefront of a data revolution, shaping the future with every bit and byte they analyze. It's a fascinating journey, but it's also fraught with challenges. As their stock price climbs, the pressure mounts. Will they continue to innovate and lead, or will the weight of expectations become too much? Only time will tell, but for now, they're one of the market's brightest stars. 8. Wingstop or Wing. Yes, chicken wings can be golden, especially with a 23.4x ratio and a $10.8 billion valuation. Who knew? It turns out chicken wings are not just delicious, they're also investment gold. Wingstop has taken a simple concept and flown it to new heights. They're not just serving food, they're serving up growth, and investors are eating it up. Their success is a testament to the power of branding and a solid business model. But as their stock price sizzles, some wonder if it's sustainable. Can chicken wings really carry them to long-term success, or is this a flavor of the month? It's a juicy story, and the market is watching with bated breath. Will Wingstop continue to fly high, or will it face a landing? It's a spicy question, and the answer is yet to be served. 7. Cloudflare or Net. This web security company is securing its spot with a 25.2x ratio and a market value of $32.7 billion. In today's digital world, security is key, and Cloudflare's valuation proves it. They're the digital gatekeepers, protecting websites and online services from the bad guys. Their importance cannot be overstated, and their valuation reflects their critical role in our online lives. But with such a high price tag, expectations are sky high. They're racing against constantly evolving threats, and their solutions need to be top-notch. The market is confident in their abilities, but the cyber world is a battlefield. Can Cloudflare keep up with the ever-changing landscape, or will they find themselves outpaced? It's a high-stakes game, and they're playing to win. 6. CrowdStrike or CRWD. Cybersecurity is no joke, and neither is CrowdStrike's 25.4x ratio and $77.5 billion valuation. They're like the digital bodyguards everyone wants at their side. CrowdStrike's rise to prominence is a story of timing, technology, and tenacity. They've become a linchpin in the fight against cyber threats, and their market value reflects their pivotal role. But as they patrol the digital perimeter, the challenges grow. Cyber threats are becoming more sophisticated, and CrowdStrike must stay one step ahead. Their valuation is a vote of confidence, but it also sets the bar incredibly high. The cyber world is watching, waiting to see if they can maintain their edge. It's a relentless pursuit of security in an increasingly insecure world. CrowdStrike's journey is far from over, and the market's eyes are fixed on their next move. 5. Legend Biotech or Legend. Diving into the biotech realm, Legend Biotech stands out with a 35.8x ratio and a $10.2 billion market cap. They're working on the next big thing in medicine, and investors are noticing. Their work in the cutting-edge field of biotechnology has the potential to change lives. They're not just chasing profits, they're chasing breakthroughs. Their high valuation reflects the high stakes and high hopes pinned on their research. But biotech is a field where success is never guaranteed. The path from lab to market is fraught with hurdles. Legend Biotech's story is one of hope and hype, blending science with the dreams of investors. Will their research lead to revolutionary treatments, or will they stumble on the road to discovery? It's a gamble, but one that could pay off in more ways than one. 4. NVIDIA or NVDA. The GPU giant isn't playing games with a 37.1x ratio and an eye-watering $2.26 trillion market valuation. They're powering everything from gaming to AI, and their stock price is rocketing. NVIDIA has transformed from a gaming graphics powerhouse to a cornerstone of the AI revolution. Their technology is shaping the future, and their valuation reflects their central role in this new era. But as their market cap reaches stratospheric levels, the pressure mounts. The tech world moves fast, and staying ahead is a constant challenge. NVIDIA's success story is a beacon for investors, but it also comes with expectations of continued innovation and leadership. Can they maintain their momentum in the face of fierce competition and rapid technological advancement? The market is watching, eager to see how this tech titan will navigate the future. 3. ARM Holdings or ARM. At the forefront of semiconductor technology, ARM boasts a 43.7x ratio and a $128.5 billion market cap. They're the brains behind the tech we use every day, and their value reflects it. ARM's technology is everywhere, from smartphones to servers. They're a critical player in the tech ecosystem, and their valuation is a testament to their impact. But the semiconductor industry is a battleground, with innovation and intellectual property at its heart. ARM's position is enviable, but it's also a target. As they push the boundaries of technology, they must also navigate the complex web of competition and collaboration. Their journey is emblematic of the broader tech industry's challenges and opportunities. ARM's story is far from finished, and its next chapters will be closely watched by investors and tech enthusiasts alike. 2. MicroStrategy, or MSTR. With a heavy bet on Bitcoin, it sports a 58.3x ratio and a $28.9 billion valuation. They're betting big on crypto, and it's paying off in their valuation. MicroStrategy's dive into Bitcoin was a bold move, signaling a new era for corporate investment in cryptocurrencies. Their strategy is unconventional, and their valuation reflects the high-risk, high-reward nature of their bet. But the world of crypto is volatile, and fortunes can change overnight. MicroStrategy's journey is a roller coaster, thrilling and unpredictable. As they navigate the crypto waves, their story is a case study in risk-taking and innovation. Will their gamble on Bitcoin redefine corporate investment, or will it serve as a cautionary tale? The market is watching, captivated by this bold experiment in finance. 1. Astera Labs, or ALAB. Topping the charts, this semiconductor darling has a staggering 97.7x ratio and an $11.3 billion market value. They're the new kid on the block, but they're making waves with their sky-high valuation. Astera Labs is at the cutting edge of semiconductor technology, driving innovation in a critical industry. Their products are powering the next generation of tech, from data centers to consumer electronics. Their meteoric rise is a sign of the times, reflecting the insatiable demand for faster, smarter technology. But with great valuation comes great scrutiny. The semiconductor industry is fiercely competitive, and staying ahead requires relentless innovation. Astera Labs' position is both enviable and precarious. As they chart their course in this dynamic industry, their story is a fascinating glimpse into the future of technology. Their journey is just beginning, and the market is eager to see where this trailblazer will lead. So, there you have it, folks. The 10 stocks that are currently the belle of the ball, or bubble, depending on how you look at it. Whether you're an investor, a curious observer, or just here for the chicken wings, it's clear the stock market is full of surprises. And remember, investing isn't just about following the hype. It's about understanding what you're investing in. Thanks for tuning into Stock Whispers. If you enjoyed this video, give us a thumbs up, subscribe, and hit that notification bell so you never miss out on our expert investing advice. Until next time, keep listening to those whispers and let them guide you to your next big win. See you soon.